Okay, a massive, almost unprecedented reversal just hit the Korean markets today. The KSPI rises 3.76%. We're going to break down exactly how major global macro shifts triggered this wild ride and what it actually means for the broader tech sector. So let's dive right into this explainer and unpack the data behind a truly historic session. So the KOSPI surged a massive 3.76%. To put that into perspective for you, for a broad market index of this size, approaching 4% in a single day is a violently bullish upside move. This incredibly sharp rally completely snapped a vicious 3-day losing streak that honestly had a lot of investors outright panicking just 24 hours prior. The index officially closed at 6,598.26. And the upward velocity was so intense, it actually triggered a buy-side sidecar. If you aren't familiar, this is essentially an emergency market circuit breaker. It holds programmatic buying for 5 minutes, stepping in just to cool off the extreme volatility and let the market catch its breath. Now, foreign investors drove this entire move, and we are not talking about retail speculation here. This was heavy, conviction-driven, institutional foreign capital storming right back into the market, executing a massive 1.45 trillion won net buy in cash equities in a single session. The timing of this is definitely no coincidence. This sharp intraday recovery perfectly mirrored the overnight rebound we saw in U.S. equities. It really proves just how tightly coupled these global markets remain whenever we see major macro shifts occur. And the rally wasn't just propped up by a few heavyweights at the top either. It was incredibly broad. We saw 675 out of 943 constituent stocks ending the day in the green. That's a clear-cut sign of genuine market-wide relief rather than just some isolated sector pump. All right, moving to Section 1, Macro, Oil and Yields. Let's trace the catalyst cascade, because the trigger actually started all the way over in the Middle East. As geopolitical tensions temporarily eased in the Strait of Hormuz, WTI crude tumbled a really steep 5.69%, dropping all the way down to $75.77 a barrel. This creates an immediate domino effect across global finance. Lower oil instantly deflates near-term inflation fears. And you know how it goes. When the market thinks inflation is cooling off, that directly yanks down government bond yields. Korea's 10-year government bond yield reacted immediately to this dynamic. It dropped 11.6 basis points to 4.148%. In plain English, this lifts the heavy discount rate burden right off of growth stocks, which suddenly makes future tech sector earnings look way more attractive to investors today.
Which brings us to Section 2, AI demand confirmed.
With those bond yields down, the environment was primed. Then we got explicit confirmation from two totally different corners of the U.S. market. Palantir proved that AI software demand is real and accelerating, while Caterpillar's massive 17% growth conferred that the physical, heavy-duty data center infrastructure spending is fully underway. This dual confirmation acts as absolute rocket fuel for data center server memory demand. Samsung Electronics immediately caught the tailwind, moving up 2.50% as investors finally realized the infrastructure build-out is actually accelerating. But SK Hynix saw an even more aggressive reaction. Because they're a primary supplier of high-bandwidth memory, which is that absolutely crucial bottleneck component for modern AI servers, their shares leaped an impressive 5.77%. But here is the most crucial takeaway regarding that capital flow. It was hyper-focused. Get this, an astounding 85.3% of that massive 1.45 trillion won foreign buy flowed strictly into just those two companies, Samsung and SK Hynix. That is just an incredible level of institutional conviction concentrated at the very top of the silicon food chain. Adding some very specific fuel to SK Hynix was a regulatory timeline. On August 4th, their U.S. ADR disclosure grace period expired. This is actually a massive deal because it essentially reopens the door for the company to announce highly anticipated shareholder returns. It basically gives institutional buyers yet another clear reason to jump in. And of course, a rising tide lifts all boats. The entire supply chain went up with it. Take Semiconductor, for example. They hold a staggering 71.2%, basically a near-monopoly grip on the HBM bonding equipment market, and they saw a solid 2.96% rise on the day.
Section 3, Power Grid Expansion.
So the AI ripple effect doesn't just stop at silicon. These data centers are incredibly power-hungry. We are entering a phase where massive physical infrastructure expansion is just a mandatory requirement to keep these AI grids running. Because of this overwhelming power demand, heavy industry is actually becoming the major secondary winner of the whole AI boom. HD Hyundai Electric jumped nearly 8% on a massive 1.1 trillion won supply contract, and Hyosung soared over 12% on a U.S. joint venture specifically for gas circuit breakers.
And finally, Section 4, the Tesla camera catalyst.
Stepping away from AI servers for a second, we saw a highly specific catalyst ignite the IT hardware sector today. Tesla's highly anticipated Cybercab requires upgraded 5-megapixel cameras. That demands a massive 240,000 modules just for the initial vehicle rollout alone. The market instantly priced in the winners of this hardware upgrade cycle. Since they were selected as the key suppliers for these advanced modules, Samsung Electromechanics and LG Innotek both absolutely exploded upward by over 14% on the news. Today's historic KOSPI reversal really shows us just how fast global macro winds can shift and how heavily concentrated the AI and infrastructure bets really are right now. So the question you need to ask yourself going forward is this: are we seeing a temporary dead cat bounce here, or is this the very beginning of the next great hardware supercycle? If you want to stay ahead of these macro shifts and receive news on the closing of Asian stock markets before the New York stock market even opens, please subscribe.